Hey folks, so what I want to go over today is the lingos or the terms in cryptocurrency. Now, these also have to do with the market in general. So the financial market, stock markets, Forex, commodities, any of those. So it's not just cryptos, but most of it will be relating to cryptos for the pure fact that cryptos is the newest and it's also, in my personal opinion and experience, the most fun, entertaining, and it's not as boring as well. So we're going to go over some of these terms because I'm pretty sure some of these are going to be very new to you and you probably won't understand them. Now, there's going to be more terms down the road that come on because you know how it is. People like to come up with things. So these are the terms that I found out that I have, studied rigorously, analyzed to really help me just to understand, because once you find out what these terms are, right, then you can start to implement them into your trading strategy or your psychology, or when even if you want to invest. All right. So these aren't really in any particular order. I believe I put them like in ABC order just to make it easier for you. All right. So the first one we're going to go over is accumulation, right? So I posted, I'm going to make sure that I don't go ahead. Okay. So what I'm going to do is I'm going to post a picture if there's a picture. Otherwise, I'm going to do my best to show you on Google and show you what it looks like. So I'm going to be going back and forth a little bit, right? And so if you need to pause the video or make it less, like 0.75 or zero point 0.5, go ahead and do that. VLC player, QuickTime. A lot of these video players allow you to do that. All right, so the first one is accumulation. So you could read about it, but I'm actually going to tell you what actually is accumulation. So I posted a picture for you to have, right? But to get an overall sense, this is a better way to look at it, right? So accumulation is, think of this like this. So right now, you could actually say we are in accumulation period, but the best time for accumulation period was right here, right? So whenever you see something drawn out like this, and usually it's gonna be for a couple of months and even a year. So like, a regular market, like a bear market or bull market usually lasts for about 18 months. So if like I think the Dow Jones and stuff like that, it lasted a very, very long time. So for example, when Bitcoin was around $400 to $500, this was accumulation period. See, this lasted 120 days, so about for about 4 months, right? So this is what right here, it's a good example. Another one right here, this was another accumulation period right here. From the highs, 500 to over here, to the lows, 300. So this was accumulation period, folks. So, find out whether it's in Bitcoin, whether it's in, you could do Ethereum, or if you do Forex, if you do silver. So like right now, silver is $14, around $14. So that would be a great accumulation period, right? And here's a note pointer. The longer the accumulation period, the greater the breakout is. So for example, if I do my pattern, right? This is my triangle pattern, right? You see the breakout right there. And you can see where this was the resistance right here, right? Right there. And it broke out right here, right? And so this, from the breakout period, that was a 70% in 3 weeks, folks. 70%. Can you get that in Forex, oil, stocks? Not that I know of. I mean, some of them probably did, but cryptos is a whole new territory. Okay, so let's go over to our next one. Airdrops. Now, these were really popular back in 2017, 2016, before 2018. Let's put it this way. Now they're not so popular because it feels scammy. It feels shady. A lot of the exchanges were like, hey, if you have this coin, you're going to get an airdrop of this coin. So nowadays, it's not very popular. So this video is taken, just if you want to go back to reference, October 4th, I believe. October 4th or October 5th. Let me just make sure. So October 4th, 2018. Okay. So yeah, they're not very popular nowadays. And a lot of the times, like if a ICO had free airdrops, usually they had like billions of coins. So it just made the ICO look not as valuable anymore. So nowadays, the airdrops aren't as important. Most people are sticking to trading and long-term investing. Now, there are good coins that do airdrops. So not all airdrops are bad. Just make sure they are good. Right? Usually you get airdrops for holding the coins, for just having them for a long time, right, in your wallet or in the exchange or something of that sort. All right, so next one, altcoins. I'm pretty sure this is obvious, but if you don't know, this is no judgment in anybody's parts. Altcoins are pretty much another word for cryptocurrencies or any currencies that isn't Bitcoin. That's altcoins. So when people say, hey, let's trade altcoins, right, you might be wondering, what are they talking about? They're talking about anything but Bitcoin. Alternative coins is the full name, okay? Right now, when I made this PDF, it was 850. Right now, there's over 2,000. So if you go to CoinMarketCap, and folks, there's like last time in 2017, there was like 30 new ICOs or coins created per day but the problem was many of them were scams and they just weren't good. I mean, they're garbage. So like right here, you can tell there's 2,023 of them. Last time I checked last year, there's only like 1,200, 1,500, and it's almost 15,000 markets. That's a little scary, folks. I'm not gonna lie. All right. So let's go into the next one. All right. Okay, so BTF. So this is because this is going to be on other platforms. So it's BTF means buy the dip, right? So that's what it really means. Now this term kind of got abused because people were like, okay, it's a dip, it's another dip, right? So it's like where do you buy? Well, here's the thing, right? This is where your trading strategy, your edge comes in, right? And I'll have another video on the trading psychology as well. So look for that. Is you want to scale in or you want to scale down. So it's called laddering in or laddering down. It's actually like an NLP term. I don't know if NLP had it first or or Forex or the trading market had it first. Okay, so that's what happens is a lot of the times, right? This is a dip. This is a dip. But you might be wondering, like, how do I know the dip, right? Again, like I said, this is where your trading strategy and technical analysis comes in. This is where your Fibonacci retracement comes in, right? So this is gonna be on the later terms videos, so make sure you check those out, right? So like I mentioned, a lot of my videos, the golden ratio is 0.618. Look over here, it barely touched it. Again, 0.618, it barely touched it. And I'll do it one more time just for reference from here to here. 0.618 right there, barely touched it, right? So that's when you know, hey, this is when it does a pattern like this is when you want to buy in. Now, what if it keeps going down? Well, that's what we call averaging down, right? So for example, I'm going to do this. This makes it easier. What if this was a dip and it goes up, or right? Or what if that was a dip? Well, here's the thing, right? You bought Bitcoin at 8,700, then you bought Bitcoin again at about 8,000. You bought Bitcoin again at 6,500, right? So you're averaging down, because here's the thing: some coins are long-term investments. So like Bitcoin, Ethereum, Litecoin, right? Now I don't know for sure that they're going to be here for a long time or they're going to go up, but we can make an educated prediction based on technical analysis, fundamentals, market analysis, and our own analysis, emotional, right? So self-analysis, right, which is the most important. And I'll go over those again on another video. So this is called averaging down. Now, when you're selling, right, it's the opposite. So you want to sell at the top. And again, how do you know if it's the top, right? Well, again, you don't sell everything. You sell maybe 25% here, 25% here, right? And then you just accumulate and then you buy the dips. So it's just going back and forth, okay? Backholder. Okay, a backholder is somebody that has coins that, let's say it doesn't go up and they just keep holding it, right? I used to actually be pretty bad. And some of the coins I still backhold because, again, it's a long-term investment. So there's actually a chart that shows you like how much you have to make back if you are down. So like if you're down 50%, you have to make back 100% just to break even, not 50%, okay? So that's what a back holder is. Some of the coins, nothing wrong with back holding, especially like, let's say you get it for free, you get it for airdrop, right? Because a lot of the times back then, people got a lot of free coins and they didn't know what to do with it and they just held it. But avoid being a back holder for all of your coins because you want to take profits, folks. Okay. A bear grind. So technically right now, Bitcoin is kind of in a bear grind, right? It's kind of going sideways, but it's more going on a trending in a bear market, right? So it's either bear grind, bear market, bear season. So there's a lot of terms you could say for it, right? So I'm gonna zoom out and show you, right? Let me delete all of this. So the direction is the market can go in 3 directions, right? Down, sideways, or up, right? And there's 3. There's only 3, folks. 3. So let's focus on the bear, right? So right now, Bitcoin was before it was at $20,000. So it's at $6,500, right? So we see, okay, how much percentage is Bitcoin down right now? Right? You go from the all-time high, which is the highest, which is another term that it's not on there, but ATH means all-time high, which is what's the highest a coin that ever was, right? And back 2017's coins were doing like 10,000, 1,000%. All right, so we are 67% down. So from what I learned from my mentors, if a coin goes down 40%, that means it's in a bear grind, okay? So Bitcoin needs to go back up from 60, where we at, 65,000 about, right? So it really needs to go back to about, well, actually, let me do it this way. Makes it easier. So it needs to go back to about $12,000 for not to be considered bear grind. And as you can see, right, we're pretty much going sideways. We're following this descending triangle. So this is, in a way, it's a bear grind, but it's also accumulation period. And we're going in a sideways trend right now. But I do believe we are going down because this descending triangle, based on technical analysis, indicates that it's going to go down. Okay. Same thing, bear grind, bear trend, right? You're looking at the volume, technical analysis, RSIs to just indicate downward momentum, right? Because look, boom, 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 right? So it's been doing this 1, 2, 3, 4, 5, right? 6. And if this doesn't hold, folks, we're just going to keep going down. All right. Black swan. So a black swan is like a very bad news event where like the market doesn't crash, but it just really goes down. So from 20,000 to what was it? 60. Actually, no, even from here to here. So from 20,000 to, what was it? Almost lower than 10,000. That was the black swan, folks, back in beginning of around the middle of December 2017, right? When the market just tanked. That was a black swan. So usually it's some news event. So like we had the Jamie Dimon event back in September, October timeframe, I believe, around here when Bitcoin's about 5,000, and Jamie Dimon lied and said Bitcoin was a scam, right? It dropped 40% in literally in like 11 days, right? So there's the worst, I think, black swan event was back in 2014 when Bitcoin was like at $1,200 and then crashed all the way back down. I don't think the chart goes back this long. Yeah, see, it doesn't go back that long. To like $120 in some exchanges because of Mt. Gox, right? So from here, we can see this was a 72% drop. This was, I believe, the Mt. Gox. Yes, right here. I believe this was the one of the other black swan events. I can't pinpoint, but from $400, folks, to $110, a 73% drop in pretty much 4 days, that's considered black swan. Nowadays, it doesn't really happen as much, right? So another black swan event would be like President Donald Trump saying all cryptos are banned in the United States. Anybody holding them will be in prison. That would be like a huge, huge black swan. And let's make sure that doesn't happen. Okay. That's the whole point of cryptocurrencies. Okay. Bots. So bots are very manipulated. They're a lot of times they'll use, they're used in other markets, forex, commodities, stocks, to trade. But unfortunately, in cryptos, they're very manipulative. So we call these guys like whales. It's another term that you'll learn as well. Is these bots, what they do is they look at the market and the sell orders, and so they put in fake sell orders, right? Bitfinex is known to be a big one. I really don't like them because of that reason. That's one of the reasons why I still haven't traded on them. So they manipulate the market, right? So for example, over here when Bitcoin was at $20,000, you better bet yourself that there is some kind of bot and manipulation going on. Now, it's very hard to prove it, but a lot of my mentors, a lot of very professional traders, and even the top ones, will all tell you Bitcoin is very, the crypto market right now is very, very manipulative, and a lot of people are using bots right now to manipulate the market. And these are the people that have, tons and tons of money. I'm talking about like institutional money, like Wall Street, they use bots. All of them use bots. So if you don't think gold, stocks, forex is manipulated and bots use it, you're dead wrong, right? That's why people in Wall Street, they get the fastest internet over there. So if your internet's slow and it can't keep up, that's why they say, you need a lot of bandwidth. So if you're a traveler, avoid countries that have slow internet. So a lot of the South American countries have very slow internet still, just to point out. But not all bots are bad. Some traders create their own bots to, figure out like, hey, RSI indicators, even TradingView, you can set up kind of like RSI alerts. So those are kind of like bots that tell you, hey, the RSI is over 70, it's time to sell. Hey, the RSI is over 20, it's time to buy. Okay. So again, nothing is good or bad. It's just how you use it. Okay. So bounce plays are pretty much like, it's like buying a dip and then you sell at the high, right? So this is when you're for over here, right? So this is right here. Let's see if I can move this bad boy. Nope. You can, I just haven't figured out yet. Okay, not there. So for example, this is the bounce play, right? So you would buy the bottom, then you would sell the top, and you keep doing this for each of the coins. So it's pretty much that simple. And you want to wait for it after like a dump or after a big move. So for example, over here when Bitcoin was less than $10,000, around $10,000, that was an amazing bounce play if you got into it. Now, I'm pretty sure most people probably didn't because, again, it was manipulated. So that would have took a lot of insider secrets. Okay, breakdown is when the price drops below support. Now, some traders don't even use breakdown. They just call it breakout. A breakout, for me, makes it easier to explain, especially to a new trader. Is usually when you do, for example, like I could have actually kept that on there. So, for example, right? So if I did a chart like this, okay, technically, okay, just to make it more easier to read, right? For example, there. So that's kind of like a wedge, right? So this is a descending wedge, right? So we're doing breakdown, sorry, breakdown. Let me zoom in a little bit. Breakdown. Where did we break down the most? Yeah, that's a good one. Okay. Okay. So you see right about here, it broke down, right? Some traders will call it breakout. I like to use breakdown because it's just easier to simplify, right? So you would just say, hey, at the support area, it didn't hold, so the bears won. So the bulls couldn't hold it and drive the price up, and so the bears, they kept selling, so the price broke down. So that's the easiest way to explain it. Okay, and so there's many examples of these, right? And usually you could draw even like a trend line to help you with the price breakdown. Like here, for example, right over here, it didn't hold the trend, so now price broke down. Okay, so you can use triangles, you can use patterns, wedges, trend lines, support, right here, your support lines, and it didn't hold. So that's a breakdown. Breakout. So breakout is the exact opposite, but price goes up now. Okay, so for example, you would change the lines, right? That's simple, right? So we had a breakout right there. So there was another breakout right here, right? So if that's a little bit too much. So there's a breakout right there, and then I'll do a triangle where it broke out. So right here, this triangle, right? Now, even though this triangle is really a descending triangle, but here's the thing, right? You don't want to rely on one pattern, one indicator, or one source to make it or break it, right? You need to have a minimum of 3 to 5 confirmations. I talk about that in my other video as well that talks about technical analysis. So right here, right, it broke out, right? So it broke out. So there was many, like you can tell right here, volume was increasing. Probably there was divergence or convergence within here as well, right? So you want to make sure you have multiple indicators and patterns and confirmations to help you out. Okay, bull trend. So that's the opposite of a bear trend, right? So a bull trend is right here. Just it keeps going up, right? So technically, even at a 10,000, it was. And to be very direct, folks, we are long-term wise, we are actually still in a bear trend. If you look from a year ago, right? So what's today? October. So October 4th is right here, right? If you invested last year, October 4th, at $1,815, you would still be up 255%. So really, we are overall we are in a bull trend overall, but right now short term we are in a bear trend. Right. So there's short term, mid term, long term. That's why there's different time frames. Right over here, minutes, hours, days, months, weeks, even years, quarterlies, stuff like that, right? So you have to look at the macro picture to see overall, right? I mean, look at this trend, folks. If you look at any market really, like cryptos has went up millions and millions of dollars. Overall, from the time Bitcoin was invented, it has went up over, I believe, 2.5, no, 2, 3, around 3.7 million%. I actually have a chart, one of my webinars. If you saw it, you would have saw it because Bitcoin is at 20,000. From the lowest of the lowest to the highest of the highest, Bitcoin went up to about 20,000%. 3.7 million%. So if we did that right now, folks, right? If you would have got into Bitcoin at $110, 18,000%, right? But there was some folks who invested, when Bitcoin was literally like a fraction, like a tenth of a Bitcoin. A tenth of a penny, right? So they invested like when it was merely anything. So I'm just going to show you like the power when people were buying Bitcoin for like 10 cents and they were like, oh man, it dropped down to 5 cents. I already lost 50%, right? And they were like really mad. So I'm just going to do it at like 1% just to show you. Okay, so you see that? So when Bitcoin was at 1 cent, that was 166 million, yep, 166 million% returns. Those numbers don't lie, folks. Now, did a lot of people hold? No. Unfortunately, the answer is no. All right, so let's get back to business. All right. Buy wall. Okay, so let me go on to, I'm going to do Gemini because I cannot stand Coinbase, folks. Just ignore my account for now. Okay, so this is a buy wall, right? So these are the buyers. So Gemini doesn't actually have the best looking, so I'll do Coinbase to make it easier because Gemini is weird because usually it's side by side. Okay, so depth chart. So this is what we call a buy chart. Usually if you have a big enough screen, Coinbase will show it on both. So the buy wall is actually, it's the red, right? So this is where it's telling you where the biggest buyers are. So if you see a vertical line, a long one, this is where most people are buying right now. So many people are looking to buy at $6,550. Many people are, okay, so let's backtrack. So the buy wall is the green. All right, so the buy wall is the green because this is where people want to sell and this is where you can buy. Okay, all right. So you can't really tell too much, but the biggest buy wall is at right now so we have $6,492 where people want to buy it, right? And you can actually tell from your spreadsheet over here, right? All right, so we have a pretty big buyer at 25 Bitcoin. Now, remember what I said about folks, about bots and manipulation. So these can be fake sell walls and fake sell buy walls, right? So this could be a fake one because what happens is then a lot of people will sell below it. And then what they do is they buy back your lower Bitcoin and then they dump it higher, right? So be careful with that. So that's why you want to look at these fake. Not all of them are fake, because the real things you want to look at is over here, folks, the trade history, because this means it's already been executed, right? Because if you look at this, right, these are very small coins. I mean, small orders. The biggest one I see right now is 2 Bitcoin, right? 1 Bitcoin. Where was the 2 Bitcoin? It was on here not too long ago, right here. 2 Bitcoin, 2.3 Bitcoin. Now, why is somebody buying 29? Oh, no. Okay, so this makes sense. So if a bunch of people have coins, at that order, it will show you how many total. Okay, so total. All right, so that makes a better sense. But sometimes you get a huge order right here, right? Like 1,000 Bitcoins. Like, So just be careful with that. All right, so that's a buy wall. All right, buying pressure is pretty much the momentum. The price keeps going higher and higher. So if you go over here, right here. So this was buying momentum. So if you see these long candles, so these are usually called engulfing candles. Some of them will be to the point where they have no wicks. So I'll talk about that, I think, later down. But they will have no wicks whatsoever, right? So people FOMO in, and so the pressure tells you to buy, keep buying, because it's going to keep going up, right? And you don't want to FOMO, but you can tell this was a good area to buy because it already dipped or retraced it, good, almost over 11%, all right? Capitulation. So pretty much, okay, I'm gonna go over Wall Street. Okay. So if you don't have this, I highly recommend you to get this, okay? I think this is the one. So this is capitulation, right? This is when somebody like panics, they get really mad. In the crypto market, we call it rage quitting. It's like, you know what, I'm done. I don't believe in technology. It's a scam. And then they just sell everything they have. And then usually what happens is when they sell everything it has, it bounces up. So please avoid being this person, right? So that's capitulation. It's when they lost, the guy loses all hopes. He sells all of his or most of his coins. Okay, catching falling knives is pretty much buying the dips when the market is going down. So it's like shorting. This is very tricky. Even experts don't do this in the best traders because you're playing with fire and with gasoline, right? If you know what you're doing, you can make enormous money, right? Enormous money. So for example, right, if you kept buying here, I know this is, averaging down, but you know, this takes skills, right? So would you rather be the guy that buys down here or the guy who keeps buying up here, right? So that's what we call, just even I don't do this anymore, folks. When it's on a downtrend like this, because it's very hard to predict when the market's going to go back up again, right? A channel. Okay, so this is a very basic term for technical analysis, so I'm not going to go into too far because I have a full video on it. But a channel is basically this. It follows. It could be a channel, bull channel, or a bear channel, or even a sideways channel, right? So, like for example, folks, this was a bear channel, right? Until it actually broke out, right? Then the channel is no longer valid. But this channel lasted for pretty much 17 days. All right, so that's actually not that long, especially in crypto market. You get channels that short. So that's a bear channel, and then we have a bull channel over here. So this was a bull channel, right? And usually a bull channel indicates a breakdown, bear channel indicates a breakout. So there's going to be a point where it just breaks out. Okay, so this one lasted for about until it broke out. Until it broke down. Let me actually make it big, stretch it out because technically it went out this far. So it lasted 40 days. So this bull channel lasted a little bit longer, right, than the other bear channel. Chops. So choppy. So right now we are choppy, right? They're indecisive. The market is indecisive right now because people are waiting for the news, waiting for fundamentals, institutional banks. So this is a great time to short or leverage. So if you're good with BitMEX, you're good with longing, Bitfinex, a lot of these exchanges allow you to short. So some of these people only do swing traders. They're called swing traders. So they only scalp the market once in a while. So once a week, once a month. So for example, right, if you were to scalp this in 1 week, you could have made 7% profit. Doesn't seem like that much, folks, but you put $100,000, and when you leverage 2x, that's $14,000 in 1 week. Not bad, right? And then the opposite, you short 6%, right? So this right now, we're like, I don't know, and I won't tell you to buy Bitcoin right now because it could go down, it could go up. So the best thing to do is just hold on and wait for the breakdown or the breakout, supported resistance. I explain all about that in the videos. All right, coin, it's another term for cryptos. Right, some people call them coins, digital assets, altcoins, cryptocurrencies. Usually if you say coins, people, even tokens, right? Tokens usually refers to ICOs though. So pretty much simple and really no picture for it. Okay, so consolidation, right? So it's kind of like accumulation a little bit, but for consolidation, you want to use what we call Bollinger Bands. So these are the Bollinger Bands. So when it squeezes, so right here is a great consolidation period. Now, we don't know how long it's going to go, but the important thing about consolidation is the trend or where it's going to head to, right? Because the greater the consolidation period, usually the greater the breakout. So we're going to see either or directions. And most likely, based on what I'm seeing here, it's probably going to go in a downtrend, folks, right? Or if this still respects this trend, it's going to go up. So it could go either way. So consolidation, so it's going to go sideways for a bit, and then it's going to break out. So remember, like back, way back, that I was showing you about, when Bitcoin was about $400. So like over here, this was a great consolidation period, and then bam, it goes up. All right. So I'll remove the Bollinger Bands to make it easier. All right. Continuation pattern. So it's kind of like a channel that I was showing you about it. That's pretty much what the continuation pattern. It's also kind of like consolidation. It's just where it's going to go until it actually breaks out. So for example, this was a downward continuation right here until it broke out right here. This was an upward continuation until it broke down from here, right? So just wherever it's going, then you want to use mainly your support and resistance line for it to see that it breaks out or it breaks down. Like for example, over here, right? Broke out, broke down. So that's continuation. It's wherever the movement is going, okay? Whether it's down, up, sideways. All right. Contrarian, probably one of my favorite words nowadays is you're pretty much thinking opposite, right? Like even in the world. So this doesn't even just correlate to cryptocurrencies or Forex or the stock exchange or anything like that, or the market, but it's overall life in general. So when it comes down to health, when it comes down to business, education, right? You know, a lot of the people back in the Roman times, you know, they were contrarians. So like Marcus Aurelius, you know, great philosopher, great war general, a great writer, right? He was a contrarian. He thought so you're going against the opposite of the crowd, the opposite of the herd, right? So, you know, why do why do you think 99% of the people are poor? Well, because they do everything everybody else does. Then why is it 1% of the people that are rich, you know, happy, successful? And you don't have to be, you know, wealthy to be happy, but it does help. I'll put it that way, okay? Right? So then you look at, you know, why are there some people that are 80 years old that are in horrible shape, pretty much to the point like they look like death. And then there are people that are 85-year-olds, you know, that can still move, that can still walk, that can still lift rocks, and they act like they're 25, right? So it's doing the opposite. And what I like to say, it's a unconventional wisdom, right? You find out what works and what doesn't work, and you use that. And you see why everybody else is doing something the same. You go against the trend to see if it works, right? And, you know, the top traders and charters in the world, they actually go against the trend. But at the same time, you know, they respect the rules of the trend. So you have to put your own spin into it. So like for me, you know, I fast a lot. That's a contrarian. I'm a vegetarian. That's a contrarian, right? I'm pretty much partially retired, semi-retired. That's the thing you want to use. You know, I don't like that word, right? I'm 26 years old. I travel the world. That's a contrarian. That's never heard of. You know, most 26 years old are working on 9 to 5, paying off their college debts. I have no college debts. That's a contrarian. And, you know, I'm not saying it just to me, but you know, in general for you, you know, someone that's doing cryptocurrency, that's a huge contrarian. Someone that's doing technical analysis, doing charts, you know, wants to better himself, that's a contrarian. Okay, so any of those, you know, reading philosophy books, reading personal development books, meditating, right? Thinking for yourself, which is very rare nowadays. I call it independent critical thinking, right? It's to actually question everything, question the media, question your professors. Even though I don't agree with college, dropped out twice. Such a scam, folks. Crypto, short for cryptography or cryptocurrency. So cryptography has actually been around for thousands of years. It was, you know, if you believe in aliens or, you know, stuff like that, like Egyptians, that's when they drew those like paintings and weird looking animal sculptures, or you can call them like emojis. Those are considered cryptography, right? So cryptos, you see this term or you hear the term cryptos, crypto, or cryptocurrency. So those are just short for it, okay? Dedicated proof of stake. So a better word is just POS, proof of stake. Now POS is another term, so we'll keep it PG or G for this term, okay? So proof of stake. I don't want to move on too fast. Okay, proof of stake. Pretty much that means like it's a mining term. That means you just hold it. So for example, think of it like a bank, right? So you know how they give you really bad interest rates, like nothing pretty much. They actually just steal from you, to be honest. So Neo is a good example. So Neo allows you to, so right here. So this is a Neo wallet. So all I do is I put my Neo wallet in here and it stakes the coins and it creates gas. So there are other coins that do this. So a lot of times you have to have in your own wallet. So kind of think of it like kind of like an airdrop, but you're getting rewarded for keeping those coins, right? So it's like signing up for a debit card or credit card, right? They tell you, hey, as long as you're a member with us for the next 10 years, we're gonna lower your interest rate by 5%. You get a 2% discount on all restaurants. So that's kind of like the easiest way to put a proof of stake, right? Dumb money. So this is what we call, like, for example, the best way to show this. So when they say, dumb money bought up here, so dumb money keeps buying the top and they sell the low, right? So then the opposite is smart money, and we'll talk about that later. So this is, don't, avoid being dumb money, right? So buying the top. So this is where technical analysis comes in, right? So wait for the support, RSIs, trends, MACDs, convergence, divergence, for you to either sell or you buy back in, right? Avoid FOMOing in and buying the top. Like many people literally bought at $17,000. So right here, right? This is another term that I didn't add, but I'll talk about it right now. It's called a bull trap. So many people bought up here because they thought, oh my God, cryptos is going back up again. But this is what we call a bull trap, because look, what cryptos did was, Elliott waves is another technical analysis, right? It's a correction, folks. ABC, right? So we don't know how long it's going to take. So this could take a very long time. It could be a nasty trend downward, or this could be it and it goes all the way up. So we don't know for sure. So that was where a lot of people got, let's say, shaken out. It's another term. I might have it down there, right? So they bought up here and they were literally mortgaging their house, going to debt, and it was just not pretty. And there's ways to avoid that, and it's more of an advanced technique, but I actually show you. But just a little bit of it is you're gonna basically hedge down, buy back down, and sell the top to accumulate an average in, to the point where you can actually mitigate your loss and make back profit. That does take years of experience. So if you know what you're doing, you can actually do that. And I can actually even help you with that if you need more of that as well. Cool. Dump. Okay, so that's a dump. I mean, that's the easiest way that I can put it at you folks. Anything over 40% is a dump. 40%. Oh, let me go back. I'm just gonna show you some of it, not all of it. Dump. Dump. Okay. So that just shows you basically that's the easiest way to explain it. Dump. So you want to buy. So anything down 40%, you just want to buy, right? So right now the market isn't doing so well. So we're getting like 10 to 20% dumps here and there. All right. So ERC token pretty much relates to Ethereum. So a lot of coins now are ERC20 tokens. So you can look up, list of coins of ERC. So Ethereum Classic, ZRX, right? And a lot of times these are used for ICOs to hedge. So instead, like a lot of ICOs don't want fiat or Bitcoin because there's not enough Bitcoin, but there's more Ethereum. So they use ERC20 tokens. So these are these are all of the ERC20 tokens right now. EOS is probably Ethereum is the most popular. And then EOS, which I still don't know what it actually does. So usually ERC20 tokens have its own platforms. So even a NEO should be an ERC20 token platform, but it has its own platform. So it might not be. Let me see if I can find it. Okay, so NEO's not on here, but okay. So like Decentraland, right? They're supposedly going to be their own decentralized blockchain platform to sell. So these are a list of it. All right, you want to go through them from time to time, feel free. FOMO, like I said, fear of missing out. A lot of people fear missing out, so they kept buying over here. I'm just gonna scoot my chair and get comfortable. Neck's hurting a little bit. It's all right. So a lot of people fear missing out. They thought Bitcoin's gonna go to $50,000, so they bought over here. Again, they thought Bitcoin was going to go back up to $20,000 when it was over 10,000. Again, another bull trap right here, folks. Both areas actually, bull trap, bull trap, bull trap. This is what we created an M. So this is what we call a double top. That's a sign of a reversal, bearish signal, right? FUD, fear, uncertainty, and doubt. So right now, I mean, back then there was a lot of FUD, news causing people to panic. The media experts going on Twitter. Oh God, Twitter is like another. I'm even thinking about like kind of like avoiding Twitter from time to time because there's just a lot of like uncertainty. It's just like, is the market going up? Is it going sideways? It's just people don't know what to do. So sometimes they FOMO in and stuff like that, right? So always use your own trading strategy, folks, right? So it's like when you go in a fight, you know what works for you, works for you. If you know your diet works, stick to it. That's why I'm a vegetarian. If you know that waking up at 7 o'clock in the morning is the best time for you to be alert, wake up at 7, not at 10 or 3 in the morning, right? So nowadays, there's not much as FUD because, like before, a lot of the bankers would say, oh man, crypto is going to fail. This is going to fail. Nowadays, we don't really care because it's just all news to tell us, to scare us. So it doesn't really matter that much. Okay, fake out. Right, like I said, right here, right? That's a fake out, right? So you get many fake outs. So even over here, a couple fake outs, 2 fake outs, because we thought it was going to break support right here, and it was going to break resistance. It did not happen, and it did not happen, right? Even though it touched it 1, 2, 3, almost 4 times here, right? Multiple times. So that's fake out. All right. So it couldn't break resistance. Flash crash. Quickly bounces. So kind of like that dump I was telling you, like right here, that's a flash crash, right? It's just people, so the whales dumped it 40%, collect their money, and then bam, bought back in, went straight back up to pretty much 70%. So let's say you had $100,000 and you sold it, bam, you cash out $100,000. You use $100,000. Now that you have, right, to buy back in at 67%. So you made $67,000 off that crash in literally 15 days. So about 2 weeks, $67,000. Not bad. Not bad at all. All right. So folks, now what we're going to do is we're going to continue to part 2 because this was a pretty long segmented outline of the lingos of blockchain and cryptos that you need to know. All right. So I'll see you on the next video.